So there's another source of impact first investing capital coming from philanthropy, which is the DAFs, the donor advised funds. And as a reminder, a donor advised fund is something that an individual would use when they allocate capital to a donor advised fund host, which is often a public foundation, like, for example, in Boston, the Boston Foundation. So let's say that I put money into a DAF at the Boston Foundation. It's sitting there in my name, but it's actually not my money anymore. It's the Boston Foundation's money. And when I'm ready to make a donation to a local charity, I direct the Boston Foundation to make that donation. I can do that with my name disclosed, or I can do that anonymously, but it comes from the Boston Foundation out of my DAF. So this is actually a real opportunity for impact first capital, because for the donor advisor, that's philanthropic money. I'm not thinking of it as investment money. However, when it's sitting in my DAF, it is being invested. It's being invested in whatever the structure is that the Boston Foundation uses. So some sort of an endowment pool, meaning predominantly invested conventionally, for the most part, on Wall Street. So imagine if you could take the capital that you have at your DAF, which think of as a parking lot before you're ready to allocate it philanthropically, and have it do mission, just like an MRI, meaning make impact investments out of your DAF while it's sitting there waiting to be allocated philanthropically. That's where Boston Impact Initiative sourced a lot of capital, because again, donor advisors think it's already philanthropic dollars. If I make an investment out of it and I lose my money, it's okay. It's doing mission just like a grant, right? So there's a real opportunity there. And if you look at the chart, you'll see that there's been a tremendous amount of growth recently. And it's interesting to look at the type of growth. So you can see, for example, $234 billion of assets, charitable assets in DAFs in 2021, and that contributions to DAFs are outpacing grants coming from DAFs, meaning the amount of money that donors are setting aside in DAFs is growing at 46.6%, and the amount that's going out the door as grants is not bad. It's a payout rate of 27.3%, which is well above 5 to 7%, but it's not good enough, because that money, again, is being pulled out of the commons, not being required to move. And what's really happening in many DAFs is some people are emptying out their DAF every year, and some, meaning 100% payout, and some people aren't moving any money at all. In the piece that Chuck Collins and Helen Flannery wrote in Gilded Giving, they estimated that if foundations had a 10% minimum payout and DAFs had a 3-year mandated payout, looking at the years 2018 to 2020, at least $193 billion in additional donations would have flowed to nonprofits. So there's an invitation here for us to really think about the way DAFs work, as well as from a policy standpoint. There's a lot of work now being done to say DAFs need to have a payout every year, so they should have transparency. They should disclose where their capital is going, and people should be moving their money back out into the commons where it's meant to be, again, because there was a tax deduction, right, from the government. You're not paying taxes on that money. And so it is there for the public good, instead of accruing larger and larger amounts of capital that they control the direction of, parked in DAFs, not doing anything, especially at a time like now when we need it. And this vehicle of saying, yes, I should make more grants out of my DAF, that's part of it, but also the opportunity to have those DAFs invested in your mission. Well, so have them work for you until you're ready to make a grant. That's a lot of the policy work that we're getting behind at BII.